Okay, perfect. Perfect. Boom, boom, boom. Give me about 13 more seconds. And I'll be ready to go. All right, so I'm gonna go find my boy Matt. Mr. Matt DeLong, unmute you. There we go, sir. Are you able to hear me okay, buddy?
Yes, can you hear me?
Yeah, loud and clear, man. How are you?
I'm great. How are you?
Doing fantastic. Doing fantastic. I miss you.
Yeah, same here. Another day in paradise.
Another day in paradise, Matt. So for some of this might be the first time we're ever hearing your voice, but you've been a real life trader now for almost an entire year. I think me and you got introduced. When was it, man? Was it December, November of last year?
I think it was, yeah, maybe March 2016. So maybe, I don't think I joined real life trading until a few months after that, but
Right, right. Well, hey, so give you guys an idea of Matt's background. So me and Matt have, like I said, we've known each other for going on almost 2 years now. Like I said, March 2016, and Matt lives pretty close to me. He's part of Team Nashville. We try to hang out and get together at least once a month to discuss a wide range of topics of things and activities and plans and goals, and most importantly, trading. And there are very few people who I have come in contact with that have had the just overall tenacity that Matt has had as it approaches trading. And we'll be asking him a lot of questions about just his background, his stories, his experience. So Matt, kick us off with, in a nutshell, man, just what's your background as a person? What do you bring to the table? What do you specialize in?
sure. So I'm married. I have two teenage daughters. So that should tell you enough right there. I actually grew up in Orlando, Florida. I moved to Nashville maybe 20, 25 years ago. But the main thing that I'm kind of known for in the Nashville area is really just being an entrepreneur. So I've started 14, now 15 companies. I've sold four. The rest of them just didn't work out, and I shut them down. And it's been quite an adventure over the many, many years. I pride myself on the one thing that I'm really good at is figuring out what not to do. So I feel like Liam Neeson. I've acquired a special set of skills over many, many years, over a long career. So, sometimes sometimes part of figuring out what to do, whether you're hiring a new person, whether you're, trying a new trading strategy, part of it is figuring out what not to do. And that hopefully get you closer to what to do. So that's kind of it in a nutshell.
Yeah.
I sold my most recent company back in 2015, at the end of 2015, and started trading kind of full time ever since then. And then Jerry and I connected a couple months after that.
So tell me about why get into trading if you are well, not if, but why get into trading since you're a successful businessman? Why make that leap and even focus on it? What's the allure of trading?
Yeah, so I have a very high tolerance for pain. Startup companies have like a 90% failure rate, and I read trading is 95%. So I'm one of those weird, rare personalities that likes the challenge, like literally likes the challenge. Like I like to find things that are really, really hard and get really, really good at it. I'm kind of an oddball that way, but the idea of trying to figure out something that is very complicated, complex, takes years to master. I don't know. It's like a hobby of mine.
Yeah, yeah. Well, I remember you mentioning that at one point we were chatting, we were having lunch. You said that you just like you just want to prove the statistic wrong. So from going forward from then, how was your first trading, your bout of trading? How did it go?
So I again was really good at figuring out what not to do. I originally joined kind of a different trading room before I met you guys, but they were very big into day trading, like you guys are. But they had the word risk, I don't think ever really comes up. And so, you would see these charts and you would watch these videos and you're like, okay, when the stock gets to this level, you're going to just, hammer 5,000 shares short or 10,000 shares or whatever. And you don't really talk about risk, right? So the summary of it all would be that I lost quite a bit of money figuring out what not to do.
Yeah.
But at the end of the day, I decided that, this is something I want to do for a long period of time. So whether I lose, X number of dollars in my first year, I'm not going to sweat it. It's part of the learning process. It's, I have a little bit bigger time frame than just whether I'm up or down in a month or a week or even a year. But initially it went very, very badly. And I think Jerry, you and I talked about it. I'm like, yeah, man, I'm down 25 grand for the year. It's just my own trading and my own stupidity. And part of it again is learning what not to do, right? Do you short everything that's had a huge run up? Do you, what are all the components? And that's kind of, been part of my journey is trying to decipher when is a textbook entry make sense and under what situation should you avoid it, right? Like,
right.
I love these training educators who typically say, oh, here's exactly what you're supposed to do. But, you see a lot of those exact setups that in certain situations you shouldn't take them, right? So I'd love to see what I should do as well as what I shouldn't do. And you've been great about kind of sharing your experiences and how that works as well. So.
Yeah, totally. So, I guess just kind of big picture question then, if I could say, what were like the top 2 or 3 main things you figured out very quickly not to do?
Well, I think not having any kind of idea of risk, that's probably the biggest one. My biggest loss was I lost $6,500 within, I would say probably a minute or two.
Wow.
Yeah. Figuring out what not to do on a grand scale here.
Sure.
So one of my brilliant ideas was the software that I had, you could set up shortcut keys, right? So I said, okay, when I hit shift down or shift up, I want to either short or go long 1,000 shares of whatever ticker I'm looking at, right? I'm like, oh, this will be awesome. I'll be raking in $5 grand a day. This is going to be awesome.
Yeah.
Well, I did that on Amazon and I was down $1,500 within a few seconds. I'm like, okay, I'm not going to take that risk. I'll let it go. And, long story short, within a few minutes, I was down 6,500. And so I closed it out. That, it was painful. I'm like, what in the heck am I doing? What am I? But that's one of the things you have to learn. We've all been there, maybe not done that exact level of stupidity, but we've all been there and made those mistakes. And I don't know why, but I think it's common in America it's not common to talk about your mistakes and what you learn from them. It's common to talk about your successes and, oh, I did everything right and everything I touched turned to gold. But that's not really reality. That's not real life trading. That's nonsense trading. That's whatever other training educators show, where they have the Porsche and the boat and the, all this stuff. That's not real life.
Yeah, agreed. And like I said, that's kind of why I wanted to share my journey, because there was no one, me and you joked about it for a while about how, the mistakes you made, but there was no one as bad as me when I first started trading. And so that's why I was like, okay, I need to share this because I need to teach people what not to do. Like you mentioned it. Charlie Munger says, right, you can take the easiest way to solve any problem is do it in reverse and start at the very worst, at the very end and work backwards. And you can kind of pretty much solve any kind of equation that way. But when it comes to trading, risk is absolutely monumental. And we all have to learn that lesson at some point. So when did that, what was then your biggest, I guess if you could try to track it down mentally, your biggest moment from, oh my gosh, what the heck's going on? I'm losing all this money. Was it a book? Was it a video? Was it an article? What kind of helped you take that leap forward from not knowing what to do to knowing what to do?
Well, I think the idea of trading in R, where you have the same amount of risk that you're willing to lose every time you put a trade on, and let's say it's 50-50 odds, maybe 45-55. The idea of using the same risk over all these different trades will certainly help manage the downside if you have 3 or 4 or X number of losing trades in a row. But actually, Jerry, it was actually when you and I had a conversation about, you're like, here's your plan, Matt. If you break your plan, you're going to be a vegan for a month. And I'm like, oh boy. And, you gave me like a mulligan the first time I screwed it up. And then, this was like last summer, I think. I'm like, okay, I'm time to be a vegan. So like July last year, I attempted to be a vegan. It was rough, but really I think the main point is that the risk that you're willing to take. Everyone has different risk tolerances. In the initial problem, my problem was I was taking way too many trades. I used to take 5 to 10 a day. And I remember you asked me, how many do you take in a week or a month? And you're like, wow, you're on the other end. Most people are afraid to take them. I was on the other extreme.
Yeah.
I was taking left and right and losing my shirt, but that's just how I learned. I think it's important also, like people who have kids, it's important to sometimes let the mistakes happen, especially if you have maybe teenagers like I do. Let's not prevent them from making mistakes. Let's let them make mistakes, and let's let them learn from them versus trying to jump in, intervene, and protect them from all these mistakes. Because I've always thought that you don't really learn until you have some pain, and that pain helps me learn, right? So don't take the pain. Don't help me, miss that. Just let me absorb it, let me learn, and let me move on.
Yeah, totally. And like that, the vegan experience was awesome because I remember you texted me like creating this plan. Okay, here's a vegan restaurant. Here's where I can eat. Here's the things that I can do. And I knew that, like I said, since you like pain and you like challenges, that's a tough one for sure. But I remember you telling me a story about going to Vegas and asking people about what our strategy is. Do you remember that?
No one had ever heard about it in this other group that I used to be in. No one's ever heard about the idea of trading an R. I'm sure the concept exists out there in books or something, but none of the traders I'd ever met had ever heard of it. They give you this weird look like, what are you talking about? And you're like, well, how do you know how much you're risking? Well, they're like, well, I just, I always use 10,000 shares and I always go in 1/5 and, add to it. And like, on stocks like Amazon that can move on a daily basis, that why would you use that same strategy versus a penny stock that may only move a few pennies a day? Like you can, I mean, it's a roller coaster depending on how volatile you want to.
Which is, it's ironic because you're totally right. Most people do teach like the, hey, if you want to keep your risk consistent, just keep the amount of shares consistent. But that's I'm not that good at math, but I can figure that one out. I mean, if you're doing 100 shares of Priceline and 100 shares of Fitbit, that's two totally different investments, two totally different amounts of money that you're going to risk. It's the same amount of shares. Just kind of
right. And I think I would say the average person in America isn't really comfortable with the word risk. They treat it like a 4-letter word to be avoided at all costs. And I really think it's kind of a shame that that's just how America has been shaped. So, for example, the average person in America cannot invest in a hedge fund, right? You have to be an accredited investor. You have to have a certain net worth and certain financial requirements, right? Because of risk, right? But the average person can go buy a lottery ticket. Now, let's talk about probabilities. Does that really make sense that you can invest in something where 99.999% of the time you're going to lose your money versus something that might be slightly higher risk, but the reward is proportional, right? So I've always felt like risk in America is something to be avoided. Oh, let's avoid at all costs. But I mean, you and I know in trading, risk is kind of how we attract the profits, right? So if I'm not taking a risk, I'm not attracting profits. So what happens if I'm afraid to take any size risk, even if it's $100, $500, $1,000, whatever X risk you're willing to take? I've always felt like that, and just it's kind of disappointing.
I never thought about it that way, man. That's a really good point. I want to bring this up too for those who are listening. I won't and don't preface any questions with the people who I interview. I just told them, hey guys, I'm just gonna have a conversation with you because I know a lot of the people who do interviews, they kind of get, here's a list of questions. And obviously there's pros and cons on both sides, but I want everyone listening. I didn't give Matt a list of questions, and he's not baited in any way. We're just chatting. The reason I'm bringing that up, Matt, because I want to ask you this question. I think that's a really interesting standpoint. What would your advice be on helping people overcome that risk? Because you have the definitions and the terms everyone's familiar with, right? Like lose small, win big, lose less money than you win. You know, failure is just another opportunity, yada, yada, yada. But how do, like mentally, like the mindset, what would your advice be on getting people over the fact that losing money is okay?
Right. So I would say that at the end of the day, you have to become, or you have to be comfortable with what is uncomfortable. Right. So the idea, I was reading this book the other day about this guy. He hired a Navy SEAL for personal training for a month. And this Navy SEAL turns out to be the toughest athlete in the world. And he lived with him for 30 days. And the whole like moral of the story is that that you really have to become uncomfortable. Now his was like in physical, kind of an athlete point of view, but the same thing with financial, taking financial risks and being uncomfortable with taking financial risks is that you really have to become comfortable with being uncomfortable. Like if you think about it, the average person, if they won $100 million today, what are they going to do? They're going to spend money on things that make them comfortable. I mean, think about that for a minute, right? Yeah. They're going to do everything and anything. They're going to have a fat house. They're going to have a fat car. They're going to have all these things around them that make them feel comfortable. But rarely will you find someone who makes themselves uncomfortable. And I think it's kind of a distinction between the average person and maybe someone else who has a slightly higher risk tolerance. So at least for me, I think, this is not something I can put into play, but I think by the time you're 30, you should have started a business, even if it failed. I think the idea of starting any kind of business, even if it's something like an Amway, something where you're taking some kind of a risk so that you get over the fear of it. A lot of times people have fear, and the fear of what they are afraid of is bigger than the actual thing itself, right? So like if you're afraid of swimming with sharks, my gosh, you should be jumping in a shark tank to try to get over that. Let's not, try to hide life from all the things that you're afraid of. Let's embrace that. Let's get over that. Let's move on, because I personally feel that everything you want in life is on the other side of fear. And if you don't cross that bridge, you're really doing a disservice or injustice to yourself.
Man, it's great advice, but it's so hard. Like how do you have that fear? So, okay, you're scared of sharks. How do you make that jump to get into the shark tank? Like what is that propels you?
Right. So I think most people, for them, it'd be mental. It's like, well, I'm not comfortable doing that. Right. And I personally try to make all my decisions in life and try to remove as much emotion as possible. That's not always possible, especially when you're dealing with your kids and, family. It's not always possible. But I think if you think about it, when someone is uncomfortable with something, they don't want to do it because of the discomfort. And the question is, let's say that you are uncomfortable. That shouldn't be a stop. You should continue even if you are uncomfortable, right?
Yeah.
So for me, I try to have as little of things as possible that I'm afraid of. Whether it's taking huge risks. I mean, I've taken plenty of risks. I've made tons of mistakes. I mean, I could tell you my life story. I've been sued a few times. I've sued people. You're a nobody until you've been sued.
That's right.
But really, like, I have a family member who's literally afraid of being sued. In almost every conversation, it ends with, "Oh, well, you could get sued for that." And I thought, how sad to live in fear like that all the time, that you might be sued. And, you ride with him in his car and he's got one of those dash cams. Like, why do you have a dash cam? Well, in case someone tries to rip me off or pull in front of me and slam on their brakes and say that I hit them. I'm like, that's really sad, because the world is full of so many experiences, and to play that much defense, and, this person doesn't have tons of money to begin with, but there's so much in the world, so much more that you could be experiencing.
Right. That's huge, man. See, the thing is, I just started realizing and mentally being okay with that like about a year ago. You have to be comfortable being uncomfortable. And it's just a strange feeling. Like, when it trades, I've started shifting away from using the word confirmation a lot, because when people use the word confirmation and they're trading, so they look at a trade and they go, "Oh, this thing is confirmed," right? This is that word confirmation. It's like, this entry, this stop, this is confirmed. I should get into that trade. Everything is right. But the problem is usually the best trades are the ones that feel uncomfortable. When you're taking it, you've already set up the trade. Your analysis says, yeah, you said to get in here, but your body's like, I don't know if I should take this trade. Those are usually the ones that are the right ones, because living in that uncomfortable state is huge. And I tell people, if you want to know what uncomfortable feels like, go through a list of some things that you don't like doing. Like, I don't know, going into a mall with a green tuxedo with a sign that says hug me, whatever it is, like that's going to make some people uncomfortable. So figure out how to put yourself in an uncomfortable situation so you know what that feels like. And then when it starts coming up, embrace it, because you're totally right. Living in that uncomfort, that is what makes you grow. And if you want more money, if you want more success, there is no other formula other than become uncomfortable in certain situations, because you will learn something that will add to something else.
Right. Let me go ahead and find this book that I was mentioning about I'll post it in the chat window. But it was one of those rare books that I was so it was so exciting to read. I literally stayed up till like 3 a.m. reading the whole thing in one sitting. I'm like, oh, what's next? What's the next chapter? It was just so, wow, you were just blown away with the Navy SEAL and his way of thinking about things. And it was amazing. So.
Yeah, make sure to post that. I'll love to share with that one. I can't remember the name of the book. I know exactly which one you're talking about, because you told me.
It's called Living with a SEAL. Yeah.
Living with a SEAL. Okay.
Yeah. I found it. I'll post it.
With a SEAL. Let me just pull it up.
There we go. Yeah, I just posted the link.
Amazon.
So just to give you an example, this is stuff that I really couldn't comprehend until I read this book. But this guy, this Navy SEAL, shows up to this guy's house in the dead of winter, and this guy lived in New York City. And the Navy SEAL has like shorts and a tank top on. He's like, what are you doing? It's freezing out there. He goes, no, it's just mental. So anyways, they go on these huge runs, like 6, 10, 20 miles down the middle of New York City, dodging traffic. I'm not talking about, hey, it's a little cold. And the Jesse Itzler, the author, he said, I was literally afraid for my life. And he said, what do you think happens in battle? Like, do you think you have to get past all that? And he could have easily said, well, I'm uncomfortable with that. We're not going to do that. But he hired this guy to push him way, way, way outside his comfort level. Yeah. It was amazing. It's an amazing story. It would be awesome if they made that into like a movie. I'd love to see that.
Heck yeah. Well, they probably will. That's really cool, man. Well, I appreciate you sharing that. And since we're on the topic of books, you are a voracious reader. What are some books that you've read that have just been like, oh, other than this one, just really helped you mentally with whatever, business, trading, whatever it might have been?
So one of my favorite books is Snowball, which is the story of Warren Buffett's life. It tells, everyone knows Warren Buffett, and today he's a massive, successful billionaire today. But at some point he was a child. At some point he was a teenager. At some point he was a young adult. And you kind of read the story of his life, how he was just very curious about things. And he kind of, took some small risks and kind of how that accumulated to where he is today. It's actually very, very interesting. It's another one of those where I didn't want to put it down. I kept reading. It took me a few days, but it's very inspiring.
Is it the Snowball, Warren Buffett and the Business of Life?
Yeah.
Okay.
Yes. Yeah. Another one trading wise that I'm a big fan of is trend following. That's kind of one of the strategies that I've employed for just swing trading is trend following. That was a very good one too. Let me get the link for that as well. There's a new edition that came out. I think it was a couple months ago. Yeah. Michael Covell.
Gotcha.
Here's the second one. Yep.
Yeah. Appreciate sharing those with me. Yep. Those are solid. Okay. And I know you mentioned the Market Wizard books a lot too. Right? Did you like those?
Yeah, there's several of those. Those were interviews with successful traders. I have to go back and look at my all my Audible and my Amazon Digital, all the books that I've read. But I personally just think that there's so much to learn about life in any one topic that it's kind of a shame when we, as Americans, spend so much time looking at Facebook and watching the cutest cat video and that kind of thing. And I really think that learning or reading books can really, really expand your horizons and make you think totally differently about how the world around us works.
Yeah.
I don't mind watching documentaries. I love watching YouTube documentaries on trading and hedge funds and all these kind of topics that are kind of encapsulated in the finance world. I just love hearing about other people's stories.
Yeah, absolutely. Absolutely, man. That's the thing is with books. I've mentioned this a few other times in just other situations, but when you read a book, it's words and thoughts and ideas that you've never had before. And I forget the guy who said it. I'm pretty sure it was Mark Cuban. Yeah, it was Mark Cuban in an interview. It was like 10 Success Rules by Mark Cuban. And he said, think about it this way. If you're buying a book and you're paying $20, this book could give you one good idea about something. It's going to invoke some type of thought in your brain that you haven't thought of before, or that you forgot that you've thought of before, and it'll just pop in your mind. You're like, oh yeah, I wanted to do that. That's amazing. And then start going down that path. But unless you read that book, it would have never happened. So you're paying 20, 25, 15, 10, $5 for an idea, for a new path to set your entire life down. And I think that's entirely true. Books are huge. And so on the topic of trend following and Warren Buffett and trading, I think it's that time, man. Tell us, Matt, how do you trade?
So I actually have 3 strategies that I use. So right now we're kind of in a bullish uptrend, even though there's been a couple week or two of pullbacks. But I like trend following for bullish swing trades, and I do take an occasional day trade. When I say occasional, I mean once every other month.
Yeah.
But the thing I really like about trend following is it's really special because it works in both the bearish and bullish markets, both short term and longer term. And what's magical about it is it could also be applied to all different types of asset classes, whether it's cryptocurrency or bonds or futures, whatever you're trading. And at the end of the day, it's really kind of like a bullish flag pattern, right? Where you have an uptrend, you're waiting for a specific pullback, and then it's continuing. And what's interesting is that when people say, oh, you should buy the dip, I always think about, well, what exactly does that mean? I know what the movement looks like, but how do I mathematically quantify what dip is enough of a dip, what is not enough of a dip? How do I do that?
So what mathematical computation did you come up with?
I actually on TradingView there's something called a Donchian channel, and it's a indicator that you can add. I don't know if you probably search for it real quick, but the idea is that you're looking over a period of 20 or 21 days. You're looking for a solid uptrend, and I can go through some examples. If I can figure out how to share my screen, I can go through some examples and show you guys what that looks like.
Sure. Actually, let me give me 1 second. Let me stop sharing. If you want to share your screen, sure. It should be the main Zoom box. You should be able to click on right below, kind of like. Let me make sure you're a co-host. Actually, you're not a co-host. There you go. Sorry, I just updated you to co-host. So now you're ready. So at the very bottom of the actual Zoom webinar box, there's a mute button and then a screen sharing button.
Okay. Share screen?
Yep.
Okay, there we go. Can you guys see my screen?
Give me 6 seconds. I got to find it on my end. Minimize this. Where is that screen? I can't see it yet. I don't think it's loaded yet.
No?
Got it. All right, found it. Sorry, I had like 47 windows.
So I'm looking at Bitcoin now, right? You see that?
Yeah, you are.
So there's an indicator. Let's see. It's Donchian channel. So I have it added already. So let's turn it on. I use a 21 period. So the idea is these little blue. They're kind of similar to Bollinger Bands, except the math's very, very different. They look like Bollinger Bands. So the idea is like if we were to say, I want to, I want to follow the trend. So if I look maybe starting right in this area, I want the top blue line and the bottom blue line to be in an upward 45-degree angle, and I want the middle line to be at a 45-degree angle, right? So the idea is I'm looking for an uptrend, and this uses math to determine this, but it's basically like the high line represents the highest high from the previous 20, in my case, 21 days. Okay, the lower band represents the previous low, so it's using the highest high and the lowest low over a period of 21 days. And then this orange line represents kind of the median, kind of the average between the two. So in this case, this is Bitcoin. I don't have a Bitcoin cryptocurrency account, but if I did, this is exactly what would happen is, okay, we're in an established uptrend right through here, right? Everyone can agree, right?
Yep.
I'm looking for a specific pullback, and the pullback is basically I want it to cross below the middle line. And then if and only if it goes higher, I'm going to play the break higher, right? So on this candle right here on the 10th of November, it crossed below the middle line, correct?
Yep.
So then I want to play the break higher. So typically what I would say is I only want to play the break higher. Well, this day, the 11th, didn't break higher. So then I'm going to reset my setup. I'm going to play this candle, and I'm going to say, okay, on the following day, it needs to break above this, and it didn't. So on the day 3, I usually let this run for 5 days. But if it doesn't break that high, I'm going to wait for the next day. If it doesn't break the next day, I'm going to keep doing that just for 5 days. So basically, I only want it to cross, and I'm going to look for the next 5 days. So I'm playing the break higher. So if I was to, if I was to give you an idea, actually, let's use the horizontal array. So I'm going to play the break higher there, right? So I have my risk down here, and I'm going to only use, I typically use like a stop limit order. So I'm only, if and only if it crosses above this top line, am I going to enter a trade? And this would be considered 1R right here, right?
Right.
So you can see it had some pullback. I'm sorry, it was uptrend. It had some pullback, and I'm playing the break higher, and that's typically what that would look like. So that's my typical kind of strategy for bullish swing trades. Now, the reason I like this one even better is because this has a bonus in it, and that bonus is this blue line here is the 50 simple moving average on the 50-day, right?
Yeah.
So not only is it in an uptrend, but this 50 moving average is helping propel it higher. I mean, that's just like a sweet, perfect kind of way to look at that. Does it make sense?
Yeah, totally. Absolutely. I mean, I know you showed me that before, but you're more or less saying this is and obviously it doesn't work all the time, but what's the success ratio with it?
Mine's about 65%. Now, I typically use a screener that I built a custom strategy, and it'll email it to me. I can share that with you in a minute, but it basically emails me at the end of the day. It uses all end-of-day data. There's no intraday trading. It's all end-of-day.
Yep.
And so what I typically do is I'll look at all the output of the screener. Let's say it's 15 stocks, and I'll look at each one of them every day. At the end of the day, I'll look at them to see what meets my criteria. What do I like the best? Now, there's certain things I try to stay away from that I just don't touch, and that is any of the biotech. It's too random for me. I try to avoid that. So my screener doesn't really have a way to say everything but biotech. So I kind of manually just filter those out. But another great example of that would be here. We're in a solid uptrend. Everyone could agree that this is an uptrend. This is BABA, one of my favorites. I have some naked put options on this. But again, anywhere in here, we're playing the break higher. Once it crosses the middle line, here's a spot. Here's some. This one you would have lost 1R here. You would have exited, but you could have got back in right here. Went higher. Same thing with all these. And so same thing with Shopify. This is same kind of thing. Now, Shopify has been super choppy the past month. But, you play the break higher, cross below here, here, lots of places in there. And then right in here, you'll see that the trend has kind of stopped. This lower line is now going down. So at this point, the trend falling would have just ended. I'm waiting for another kind of uptrend to establish. But that's the number one, the main strategy I use. The other one I use is I do sell naked puts. Believe it or not, I like to do naked puts a little bit more than like credit spreads. So
Yeah.
I do credit spreads sometimes, but what I've noticed though is like in Shopify, I have some $80 and $85 naked puts on this. But what I noticed is if I'm looking at a stock that's had some kind of a bearish movement over the past 4 or 5 days, like Shopify has here, your premium on the option, if you're selling a put, is we'll just say pretty nice, pretty juicy.
Yeah, totally.
And so what I do is I'm waiting for the emotion to build. My broker, believe it or not, doesn't even have any of the option Greeks. So this is all just Matt's brain figuring some of this out. But what I learned was that in this, in some of these downtrends, you get the maximum option premium, right? So then what happens is if this, like let's say right in here, if I sold some, I did sell options, but right in this time frame, once it starts going back up, I can either close the option, buy the option back for typically 20 cents on the dollar, or 20 cents. I'm sorry, when 80% of the premium is exhausted, or I could go ahead and buy a put option. So once it's trending back up, the option to kind of convert, the option premium for converting naked put to like a bull put spread, buying the other leg, once it's going up, the other leg becomes fairly inexpensive, right? Because it's kind of moving in the direction of. So I typically, when I do bull put spread, if I do them, it's kind of over a period of a couple days. I'll sell the naked put today when the emotion is high, and let's say, for example, this is Mr. Squiggles Jr. Let's say Shopify kind of continue. Oops, I didn't mean to do that. Try again. Oh, it didn't delete, did it?
Yeah, it's weird. It's weird, the drawing. It's like you gotta click on the whole. Yeah, you gotta click on it. Yeah, there you go.
Okay, so let's say that Shopify goes like this, right, and continues higher, and maybe it just goes sideways the whole next 6 months. Who knows? But the idea is once you can get some pretty juicy premium on the way down, right? So if you're selling naked puts, but on the way up, once it continues in my direction, I can either close out the trade or convert it, so to speak, into a bull put spread where I buy a lower rung. So I might sell the 95 and buy the 90. So once the stock prices up here, buying the 90 is usually going to be a little more attractive. So when I did this a few times, when I first did this, I'm like, shoot, you have to buy the same expiration. So you have to be careful about whether you're using the weekly options or the monthly. You have to kind of make sure you can get the same expiration date for it to be a true credit spread like that.
So the question Mike had is, how far out do you sell the naked put usually?
The sweet spot, from what I've learned, is somewhere between 45 to 90 days. I am experimenting with some leaps. I was talking to Dean about this earlier. So I actually have a January 2019 leap on Shopify that I sold for $15. I think it was a day or two ago. So $15 a share. Now, I'm going to get, the premium regardless of what happens to the stock. In a year from now, or a little over a year from now, I may or may not be put the stock, right? But at some point in the future, I can close the trade out profitably. I can just hang on to it. I don't worry about Shopify over the next period of year or two. I'm not worried about whether they're going to make it or whether they're definitely going to make it. I'm a big fan of Shopify. My previous company actually competed with Shopify, so I have some inside knowledge about how they operate and things that maybe the average person, the average public wouldn't realize about them. But to answer your question, usually 45 to 90 days to expiration. That's usually the sweet spot.
Sure. Now, do you do mostly put sales and shares, do you do any directional options like buying calls and buying puts?
Not a lot. I have every once in a while I'll pull the trigger on a weekly option newsletter trade, but I typically don't do that. Um, I like the crazy fancy stuff personally.
Yeah, that's totally
So, I
understandable.
mean, I've sold like I've so on Shopify specifically, back, I guess it was maybe a month ago, there was a big famous short activist that called Shopify a get rich quick scheme, which is all this volatility right through here.
Yeah.
And I agree that Shopify was overvalued at $124.
Yeah, you talked about it. You told me about it too, and me and you both.
Yeah, I'm like, yeah. So the idea of a company that's trading at 24 times their revenue, there's a little, let's see if I can get to it. There's let's see if I can go to shop. Oops. Let me show you this this little statistic. And if any, I'm using the free version of this, but there's this PS ratio here. If anyone's ever looked at that, let me make it a little bigger. Super big. So the idea that a company, this was at 24 times, which means the total value of the company, all the shares times the current price, and they compare that to the revenue, which is at the time was 24 times, which means the company is trading at 24 times their revenue, which means if you bought this company, it would take you 24 years to make your money back. If you bought 100% of all the shares of Shopify, it would take you 24 years not to break even, but to make your money back just off the revenue alone. Now think about that. Most companies that are growth companies like Shopify, they trade at 10 to 15 times revenue. Shopify is kind of a special case. They maybe get a slight premium. But the idea of trading 24 times revenue back up here when it was up in the super, super high level was just beyond me. So I actually had shares and I sold them.
Yep.
And then I sold calls at the 120, 124, I'm sorry, 120, 125 level. And believe it or not, I wasn't patient enough with it. I made some decent money, but if I was a little bit more patient, I could have waited for all of this to happen. I could have made even more than I did.
And here's where one of your specialties comes in, and I don't hope I don't make you uncomfortable saying this, but in a way I do because you like being uncomfortable. You're very good at fundamental analysis, and you put a lot of fundamental analysis on some of your stocks and some of your picks, especially for the longer term haul. Do you have any of those fundamental data that you would mind sharing with us that you feel most valuable? Because like that one, price, what was again? Price per
the PS ratio, yeah.
Yeah, the PS ratio.
So price to sales, yeah.
Price to sales. So tell us more about which ones you like and why.
So I typically like I'm building an automated thing, which we'll talk about automation here in a minute. But I personally like growth stocks, and typically that ends up putting me in the technology bucket, which has had a couple rough week or two, which is fine. I'm still profitable, but I really like stocks that are growing quickly. So if you think about at least the background that I came from, working with venture capital, private equity companies. Venture capital companies, they fund companies that are in growth mode. It's very, very rare for a venture capital company to be profitable, right? Mm-hmm. One of the things that the short critic had to say about Shopify was they're not profitable. Well, if you think about it, they're not profitable, but that's because they've chosen not to be profitable. Now, before everyone rolls their eyes, I'll explain. So when I ran a software as a service company myself, I ran it from 2008 to 2015 when I sold it. We literally tried to make no more than $1 of profit a year. And the reason was we wanted to take every bit of profitability, every extra dollar we could, and throw it into the fire that is our sales and marketing efforts, sales and marketing teams. And we wanted to grow the top line revenue as quickly as possible. And that's the typical model that most venture capital companies are looking for. If you're, growing at 10% and you're eking out a nice juicy profit, that's not what venture capital is looking for. That might be what private equity is looking for. That's not venture capital. Right. So the idea is I'm looking for those same kind of companies, but on the public market. So companies like Shopify, there's several of them like that I really have taken a liking to. Square is one of them. I really like Splunk. I don't know if you've ever heard of Splunk.
SPLK.
Yep.
Yep.
Um,
What's
Splunk is another. Yep.
So when it has a black and red, so this one has a black PS of 9.36. Does that mean it's a positive?
So they're always positive. Red just means you're kind of pushing your luck, right? So I think when it goes over 10 is when it turns red. Yep.
Gotcha. Okay, so below 10. So why is it always positive? Is it impossible to be negative?
Yes, because it cannot be a negative number. Like your PE can be, because in this case you wouldn't have profit. So the way you think about this is this company right here. Let me zoom in again. This company has 1.16 billion in revenue, and that's usually using the last 4 quarters. So you would say the trailing 12 months, trailing 4 quarters. So they sold 1.16 billion in sales, but they lost 300 million. So some of these companies, I don't know the marketing. I haven't dug into Splunk as much as Shopify, but Splunk is one of my favorites. But the idea that I'm intentionally borrowing money, which is super cheap in today's world, to borrow money to fuel the top line revenue growth, that is a viable strategy. Now, when you get into trouble is during an economic slump, those companies aren't nearly as valuable. What is valuable are the companies that are profitable, that are eking out, decent profits that are typically paying dividends, right? So you have to kind of think of where we are in the market cycle. Right now we're in an uptrend still until the 50 SMA and the 200 cross lower on SPY. I'm not worried about whether things are going to continue to go higher. When when that does happen, it's softening, but it's not the end of the world. We've had, if you look at SPY over the course of, year or two, we've had we've had a crisscross here back in the beginning of 2016.
Yeah.
Actually, this was actually one of the coolest times. This is when I started short trading. I wasn't doing it live yet, but I had some paper trading. And I was actually up hundreds of thousands of dollars every week. Now, of course, that's paper profits. It's not real, but it would have been awesome. It would have been good time.
Would have been fun. Would have been cool.
Yeah, right. So, that's kind of that's one of the things I look at. But right now, these two lines are parallel. Prices above. Yes, they may dip a couple times, week or two, maybe a month below, but things are continuing higher. So
you mentioned software as a service, or SaaS. Why do you like that industry and that sector?
So there's two kinds of software companies. Something like an old school Microsoft or Oracle, any of those companies, their business model is basically, I'm going to sell you a piece of software for a single fee. So if you think about like the Windows operating system, you typically get a one-time fee, right? So once I buy a Windows license, I might need another one a couple of years down the road, but I'm getting a one-time fee. Now, that's the old school model of pricing for software. Now, companies like Oracle and Microsoft do have some software as a service subsidiaries, companies they've acquired. But when I say software as a service, I'm kind of referring to a good 60+% of their revenue, maybe 80% of their revenue comes from the recurring fees, the recurring revenue. So I guess at the end of the day, would you rather spend, as a consumer, would you rather spend $300 for a Microsoft Windows license or $30 a month, into the future? Now, the software as a service companies, at the beginning of it, cash wise, on month one, if you had to choose between $30 for the very first month or $300, the 300 would have been a little juicier. But over time, as you know, that can outrun itself over the 10 or 11 months. You end up paying more than you would have over time. And so the idea is software as a service companies have that recurring revenue. And the cool thing about recurring revenue is it recurs. So it continues over and over. So the consumer, if he had, let's say they don't have $300, now he has a $30 option, I guarantee they're going to sign up for that, even knowing that they would spend more over time, right? The cool thing about software as a service companies too is that they kind of maintain the updates and pushing out software updates for you on a daily, weekly basis. The company that I sold, we did what's called daily deployments. We did continuous deployment, which means every day a new version of our software got pushed out. It might only have some bug fixes, it might have small features, but every day it automatically got pushed out. And so what happens is you lose track of version numbers. Like I'm using Shopify version 2.5 or 2.6.
Yeah.
You don't really have to worry about any of that anymore because you're always on the latest. It happens for you automatically. So in the case of Shopify, all those features are being pushed out automatically, and you're able to focus on running your business, whatever you're selling. If it's, handmade chocolates or dog toys or whatever you're selling online, it kind of frees you up to focus on that and doing the sales and the marketing of that versus having to, okay, I got to run a patch, I got to run some security updates. All that is handled for you.
Yeah, that's, and again, the cool part is you're trading what you know, because you know this industry and you've been involved in it, so you have a really good idea of what to look for, right?
Right.
So Mike was asking about, would you look over Roku? Tell us what your thoughts on Roku.
Roku. Yes. Okay. So one of my other caveats I didn't mention this was I like at least 8 quarters of performance as a public company. I forgot to mention that. So in this case, they haven't been public long enough to have 8 quarters is basically 2 years of trading. So I typically have not touched Roku at all. Let me show you this nerdy stuff that I do here. Can everyone see this?
Show us some nerds.
So I literally keep track of some of this stuff. These are the revenue and the earnings for these companies. And these are the 2 main things I look at. So in Splunk, you can see that this column right here represents their revenue, right? So you can see that this is kind of a good uptrend, right? Their revenue is continuing. And part of why that continues is when you get into recurring revenue, I remember trying to forecast the budget for like the next year. So let's say we're trying to predict how much revenue we're going to do in 2018 for budgeting purposes. It's super, super easy to do when you have recurring revenue because all your salespeople are they're trying to find new business, and assuming you can maintain and you lose maybe 0.5% of your customers every month,
right,
you can very easily predict how much revenue you're going to have into the future. It's very easy to do. Now, compare that to the old school Microsoft where every month a salesperson's quota starts over at 0. They got to pound the pavement, have to go find some new customers. That's hit or miss. That's pretty choppy. It's hard to predict, right? It's hard to know. It's hard to make hiring decisions. It's hard to do any of that. But the cool thing about the recurring revenue is that it makes that projection a lot easier to kind of figure out.
Yeah. Now, so how much time would you say you had to put in to getting all this setting up and to getting all this figured out, and was it worth it?
Yeah, it is. It's actually pretty interesting because what I end up doing is I haven't updated all these companies, but what I did was this model of where does Shopify fit into the grand scheme of all these other software as a service companies. And I'm using like their quarter over quarter growth and looking at the price of sales. And so you'll see Shopify, this line right here represents the growth. 0.8 is kind of 80% revenue. This is one of the reasons why I logged me in. I kind of recommended that for the fall real estate portfolio. So the idea is you want the companies that have some decent growth but aren't very, very expensive. So Team right now is, I guess, less than 40% growth, but the PS at the time was fairly high. Now, I haven't updated all these companies, so I don't follow all these companies, but when I did my analysis, I thought, wow, Shopify really is in a league of its own. It really is. I mean, it does demand a premium just because it's kind of out here all by itself.
Wow.
So yeah, wow. It's pretty interesting. So what I did was each one of these I have like an existence. So this is Benefit. This is Box, this is BroadSoft, this is Salesforce.com. All of these, you'll notice that the revenue is increasing. I just copied these charts from, I used to be a Finviz Elite member. HubSpot, I mean, all of these have the same kind of thing. Now, Snapchat, at the time, didn't have the 8 quarters that I was looking for, but they had just the 6. But Snapchat is not, let me look at it. It's not one that I would touch right now. I don't care if it just goes to the moon, but part of the reason is this right here, where I have 700 million in sales, but I'm losing 3.2 billion every year. So the idea of I'm gonna spend $5 to make $1, like mathematically, how does that work?
A little rough. Yeah.
Right. And you can see, like I have two teenage daughters, and I said, if you had to choose between Instagram or Snapchat for keeping up with your friends, all the friends that are your age and your grade, what would you choose? And without hesitation, they both said, easily choose Instagram.
Yeah, yeah.
Like Snapchat does, has some cool features, but then what?
Yeah. Well, and the other thing is, like I said, at the end of the day, sales. I mean, have your daughters bought anything off of Snapchat or showed you, hey, Dad, I want X, Y, Z thing? And the answer is probably not.
No. And as a father of a teenage daughter, being able to create content that disappears automatically does not put a good feeling in my stomach.
Correct. Yeah. Yeah. No, exactly.
So I know I'm not the only one, but I mean, Snapchat, who knows, they may turn things around right now, but for that reason, I don't touch this at all.
Yeah, totally understand. I'm with you 100%. So, I mean, going forward from here, what's your trading goals? What's your thoughts? Where do you see Matt Delong in the next few year or two?
Right. So, one of the things that having a software background, one of the things that I'm doing, give me just one sec. Sorry, I had to close my door. One of the things that I'm doing is I'm creating an automated system that's going to do a lot of what I do manually right now. Right. So, for example, there's a tool called Benzinga. You guys can all go create a free trial, but Benzinga Pro has a tool that will give you all of the statistics, which is basically all these financial numbers, the revenues and earnings, in an automated fashion, right? So I can subscribe to this tool, get all this stuff, and make some of these decisions already kind of in automated fashion. So I hired a company back in July as a U.S. company in New England to build a software trading platform. And the idea is that we're going to create these strategies, and for like $700, you can buy 20 years of market data on a daily basis. So every stock that's ever traded over the past 20 years, the high, the low, the medium, the high, the low, the open, the close, and the volume, you can kind of collect all that and build strategies that kind of use that data to make buying and selling decisions. So a great example of that would be, one of the things that I learned through all this process is that Shopify had kind of run up maybe 200-300%, but their revenue was only up 70%, right? So the idea is it kind of got ahead of itself, right? And it might be 1 or 2 quarters of it consolidating and then continuing higher. But the idea of, we all know how we try to typically avoid earnings. Well, the idea is that if a stock, if you look at any Shopify earnings over the past several quarters, you'll see that there's a lot of anticipation of that it's going to continue higher because it always has. Well, what happens when the price gets ahead of itself? Is it going to gap up and kind of fade? And that's kind of what happened kind of in some of these places here, was it gapped up because it kind of got ahead of itself. And then, the buyers and sellers, or the buyers kind of drove it higher. And then this Citron piece came out and drove it lower. So what's interesting is I'm automating some of this logic, and I really encourage anyone, if you haven't done it before, you can go, I can post a link, but you can actually take your current strategy, assuming that there's data for it, and automate it. And what the cool thing about automation is that you kind of have to tell the system when not to place a trade, right? So the idea of, I will only take, Jeremy, your main strategy is like bearish, gap down day trades. So imagine taking that strategy and creating a universe of what you want to look at. So imagine taking a specific ticker symbol out of the equation and saying, here are the parameters I'm looking for. And you can create whatever filters you want. You say, I'm looking for stocks between $5 and $200. I'm looking for at least X amount of daily volume, whatever these criteria are. And it will build a list of things that match that criteria. And then it will take every single trade. Now, if you wanted, you could say, okay, I want to only have 5 open trades at a time. I only want to trade $500 of risk. You can build all these things in. And so this platform I call it my MBA because I dropped out of college. This is my MBA. But the idea is that you can build this set of strategies that can run over 20 years of market data. You can do what they call the walk forward analysis. So I can say, okay, starting in January 1st, 1997, I want to look at every year one at a time. How would my trend following on a daily or weekly chart, how would it have performed over time? And it really gives you confidence when you see that the things that you're doing right now every day works really well over the long haul, but works really well, especially in certain situations. So in an uptrend with low volatility, how does my gap down strategy or X strategy, how does it work? And the cool thing is that we're going to be able to create these strategies and then make a copy of it and maybe make a little tiny tweak to it. So I can do like a split test, A/B split test, to see which variation would have worked better over time. So
right.
It's pretty interesting. Yeah.
Okay, so I got about 6 or 7 more minutes because I got a phone call in a little bit, but two final questions. Question number 1. How would you, or what advice would you give to someone with an account of like, let's say $2,000-$3,000 to grow it? What would your advice on that be?
I assume it's someone who wants to learn trading or just wants to put the money to use.
Good question. Let's say someone who just wants to put it to use. They know trading, they've done the homework. Where's their next step?
That's tough because you're kind of below the pattern day trade rule. And it's not really enough to really diversify in 10 or 20 different buckets. It's a good question.
Well, I'll let you think about it. Because it is it's a tough one. Because I mean,
I actually wrote an article about how would I spend $500 in trading, and the short answer.
That article.
Yeah, and the short answer is use it to learn how to trade. You don't really expect any kind of return. Just use that to learn. Whether you're paying $150 a month for like a demo paper trade account, use that for a few months. For 3 months, that's $450, and then take your significant other out to dinner and or your spouse or significant other and say, hey, is this something I want to continue? It's really tough with that small amount of money.
Yeah, absolutely. But you're totally right.
Your commissions are going to eat through that really quickly. You could almost buy Berkshire Hathaway, the B shares, and just leave it alone and look at it in 10 years.
Yeah. Yep. 2000. I mean, it's, that's a fun trend. That would work well with your trend following system right there too.
Right.
Okay. So second question before we go, in regards to both business and trading, if you had someone who was standing at a crossroad that had a potential business opportunity to make some money, or they could trade and make some money, what direction would you send them down? Knowing that you've gone through both now.
Oh, geez.
Which one do you think is, I guess, better investment of time and resources?
That's a good question. It's hard to know without knowing, if they're selling apples door to door. I would say do the trading route because that business is stupid. But I guess it depends on what business it is, but I don't know. Both have very high failure rates. You have to definitely spend some time thinking through that. It's hard to kind of answer in an abstract.
Yeah. Oh, it is. But those are both questions just a lot of people get faced with, and it's I don't know. I mean, I like you mentioned, I guess with a small account, it's like you got to figure out some way to invest in yourself, because even though you might see it as losing money, right? So if you have $2,000, you're like, okay, let me pay $500 for XYZ. Like I mentioned, it's like a book. When you pay that, you're paying for ideas that could send you, just put you in a different mindset, start attracting more money, attracting more opportunities, attracting more friends, better friends. Proximity is power, that type of thing. And then you'll get the wisdom, if you will, to make more money, because money's everywhere. Money can always be created. So you got to have the mental capacity to know what to do with it. Otherwise, you're not going to ever make that much,
Right. I kind of had this conversation with a friend a few weeks ago, and or a few years ago, and the idea was that everyone has IQ, but not everyone has a solid financial IQ, and that's why a lot of people who win the lottery end up just blowing it and destroying their lives and having huge debt because they didn't have the financial IQ to keep the money that they earned. They just kept doing what they're doing, spending more than they make, and end up digging a huge hole for themselves. And I actually met someone a few years ago who actually had that actual real story. He told me a story. I'm like, oh my gosh. I was thinking to myself, how do you have a golden opportunity and you just really squandered the whole thing?
I know.
Not only did he win hundreds and hundreds of thousands of dollars, it wasn't like a Powerball 200 million, but I think it was close to $500,000. But at the end of it, he had a $500,000 debt because him and his wife kept spending years after the money was all gone. They borrowed money and got loans. And it's like, geez, how do you get into that situation? That's terrible.
Yeah, it is. It is. That's another reason where I don't know if I've ever told you this, but at some point, way down the road when I have more experience and just more experience in being in the managed money field, I'd love to work with athletes, and artists and people who come into money very quickly, and to help them with it. Because like I said, that's not their specialty, and that struck me when I watched that ESPN 30 for 30. You'll see some scary story, man. I mean, people to get, $20 million when they're 19 years old and continue to get millions of dollars for years and years, and then it's just gone by the time they're 40. Just evaporate.
Right.
It's always shocking. But hey, man, thanks so much for sharing and spending your time with us. I know it's very valuable, and I truly appreciate, first of all, our friendship. I appreciate all that you've given me, the knowledge, the uncomfortable tasks, everything that you've provided for me and helped me with. Just want to say thank you publicly, and I'm excited about having dinner with you soon.
Sure, no problem. Thank you. I enjoyed it. Hey, I'm going to post a link, a YouTube video, something I think is very, very helpful for people to continue watching. It just talks about the power of grit and continuing through on your way to success. So.
You gonna throw that on Slack?
I'll put it I can put it in Slack, but I'll put it in the webinar chat as well.
All right, man. I appreciate it, dude. Thank you. You rock.
Yep. Thanks, guys.
All right. See ya. Beautiful, beautiful, beautiful. Let me get my screen sharing turned on here. Just give me a few seconds. I don't know what that button will do. Let me get my screen sharing turned on. Here we go. 3, 2, 1. All right. I think I got my screen sharing turned on. I got a phone call in just a few minutes. But so for those watching the recording, thank you so much for watching it. Hope it was helpful. Again, I plan on doing one of these every single Wednesday around this time and just interviewing traders. And as I mentioned before, I forgot to bring up, and I apologize for this, Matt, but Matt has been one of the traders that I've seen personally go from just losing money left and right to making money left and right. And I saw firsthand the amount of time it took, the persistence, the perseverance, the hours, the grind, the reaching out, the being okay, not being afraid to look dumb and ask questions, everything that you think of that can be done. Matt's done it. I saw that firsthand. So I don't want to say if you're still here, Matt, just shout outs to you, man, for truly changing, going through the discomfort, being a vegan for the month, following your plan, reaching out, asking people, pouring into people, putting in time and effort, because now Matt is profitable every single month after month. And it went from the exact opposite of that. And again, it's mostly a mindset thing, folks. It's having that approach, having that focus, knowing what you're going after, and then attacking it. So again, I'll be reaching out to a few of you, scheduling some interviews. I got an open slot next week. And so if you're always interested, you can always reach out to me. But I got a few people who are ready to rock. Before we go, because like I said, I have a phone call that I got to get to, just a few quick minutes. Time Warner, this is the 5-minute chart, had a little bit of a breakdown. And during the whole time we were chatting, it didn't really do very much. So here's what I'm going to do personally, because I know I won't be able to manage this one. I will say if you want to lower stop on TWX, what price would this be? 90.78. 90.78 looks reasonable, but I will exit all here and take my gains and move on. I got a phone call, so I know I won't be able to manage this one. I'll put it over here. So good small win. I'll take it. And beautiful. So I'm gonna get that one closed out here in just a few moments. Again, if you want to lower your stop, you're more than welcome to. 978 looks to be will be a good price. Definitely gonna lose less than R in that regards. Folks from around the world, traders, investors, friends, fans, followers, family, thank you for being here. You are amazing. My mission is to enrich your life, and I'm going to continue to do that each and every single day that I'm here. If you ever have any questions, feedback, thoughts, any way I can continue to help, let me know. Otherwise, my friends from around the world, you guys rock. Thank you so much. And until next time, love life, live life, and trade it. See ya. Bye.